weekly analysis on EMini futures. We're looking at the EMini S&P 500 index futures. Today is Sunday, January 1st, 2023. Happy New Year to everyone. We're looking into the week of January 3rd. Monday is an official holiday. We're starting with the 10-year daily charts. The levels are pretty straightforward, and I've drawn some gap fills there also, but it's pretty straightforward as of now. If you can look at here, we sold off, then we went squeezed, touched the top of that trend line there, and then we sold off very quickly, and we have been consolidating to the side here. And in this consolidation, this two levels of 39.23, 38.10 has been what's been holding. So for me, I would like to take a short here because we tested it once and twice. So I'm expecting the third time some kind of selling pressure to be there. But if it breaks out, then we are testing that 40.10. Hopefully that would be, to be very precise here, let's move that 40.10 maybe like to here somewhere. Yes, so that looks like a 40.48. So if we can retest that 40.48, that would be great. But if with the tax harvesting sell-off going into Friday, towards the end of Friday, we saw a squeeze. I'm hoping that squeeze continues and price action will prevail. We'll know more as the market opens how the price action takes over. But if we break 39.23 and we retest from the top, I would take a long. But if we do not break 39.23 and we retest it from the bottom, then I would obviously take a short targeting 38.10 again, and obviously having runners for the 37.16. If you break 38.10, I will take a short at 38.10, definitely covering here at 37.60 area, 65 area, and then having a runner to retest 38.10 and all the way to this downtrend line. Now if you go to the weekly, let's see if anything changes on the weekly. I'm just analyzing, as you know, I do this on the fly with all the viewers. So looking at the weekly, I could see that there's been a squeeze here like that, and then that's a bull flag, or you can say, sorry, a bear flag, a bear channel. And so we sell off hard and then we squeeze up, and then we actually have touched that channel. So let me draw that channel for you so that you can have a look at it. It's very important to do these channels so that you know exactly what I'm looking at. So look at that. It went, touched that channel here on the weekly, could not break it. And that was more of a doji. So that means both sellers and buyers are present in that whole week. So wherever the week started, pretty much ended in there. The next week, almost similar, but it was engulfing in that previous week. So it's been a choppy 2 weeks, if you can say. So if we want to trade this kind of price action, these are the two levels that I would say that we take into account and not trade anything in between from a swing perspective. Intraday basis, there'd be a different story there. You would look at order flows and everything, and look at my order flow a video to understand how I do intraday entries. Now, one thing that I would like to also check out is the monthly here, and I want to go to the max here, and here what I want to show is the SPX, and I want to really show you something which is a little bit fascinating here in this area. So if you see this drawdown here, that is around 878 days of 40 of around 50%. So 878 days, 50% drawdown. If you look at that, that's 532 days of around 54%. So 50% is the common denominator. I want to skip the COVID drawdown because it was more of like a short 1 month drawdown that the government bailed us out by pumping money into the market. If you look at this one that I have drawn here, this particular one, and let me squeeze the chart here. If you see, that's around 555 days, around 50% drawdown. we are nowhere there in the 50% drawdown, and currently our drawdown is around 272 days of 26% drawdown. So we have almost another 50% to go if you compare with these two events. Will that happen? I'm not sure. I don't know. So but I want to find out to see if there is a similarity that will get repeated. Then if this starts selling off, then we are looking at 3281, so one area of support here. And how many days do we have from here to, so around another 128 days. So that's right around that 500 days or something like that, or 300 some odd days. So let's go to a little bit more here. So that's right around the 500 days, and that's around another 35%. So we need another 20% or so. So let's, and that comes to a good support area here, and that's looking at, let's say what time, around the September time frame. And if you look at the VIX futures and what the market is looking at in terms of the volatility price, they are predicting a sharp rise from where it is now all the way up to July, and a cool down a little bit in August, and then again a very sharp rise to September. Now, will this happen or not? I don't know. This is what our predictions or what the charts are showing and what the futures prices are showing. So, keeping that into mind, I still think that our bearish channel will continue. That sell off will continue. These are the key levels. Obviously, we know 3,500 is a key level there. Will it break? Well, time will tell. And if that breaks, then we are looking at these other levels, which are very strong levels to take some short squeeze up from the sell off. That's all I had. As always, keep your stop losses tight, your losses small, and your profit at large.